The next hour is going to be a real treat, so please strap yourself in, get ready to ask questions, and we're going to have a fantastic time together this morning. We get a chance to hear from our four panellists. A massive thank you to you all for joining us. We're going to get a chance in a moment to hear from them all individually, and they'll be imparting some of the wisdom and some of the insight that they see from their seat themselves to us all on this webinar. We're here because, of course, it is the Money and Pensions Talk Money Week this week, a week that encourages us to open up and to talk a little bit more about money, from pocket money to pensions and everything in between. And as we progress through this time, as I say, there'll be a chance to ask questions. On the right-hand side of your YouTube feed, you can type questions in there, and we'll be putting those to the panellists this morning so that we can hear of their opinions. We'll come to them in just a moment. There are no silly questions this morning. Please don't feel like you have to ask a question of high intellect or of deep understanding. As long as a question is kind of honouring to all those around and really respectful, then please do ask away in the questions on the right-hand side. Our four panellists this morning, I'll run through quickly who we're going to be hearing from. We've got Claire Barrett, consumer editor, Financial Times. Kind of some of Claire's expertise would be talking to children about money, financial inclusion, investments, amongst many other things, of course. A really warm welcome and thank you to you, Claire. We've got Muna, who is the CEO of Rooted Finance, a London-based specialist debt advice charity, offering free money and debt advice services to communities in London. Some areas of expertise for Muna would be financial inclusion, open banking, and often challenges faced by vulnerable people. Muna, thank you to you as well for joining us on the webinar. Andy Lima has joined us. Andy runs the Centre for Personal Finance Wellbeing at Aston University. He also helps out with the local debt centre for CAP, as well as being a money coach. He holds a variety of academic posts around the world. Areas of expertise would be mental health, money, insecure housing, taxation, financial capability. Again, thank you, Andy, for joining us on this webinar. And last, but by no means least, a really warm welcome to Carol McNaughton-Nichols, who is the Associate Partner at Thinks Insight and Strategy. Carries out research in Financial Leasing Foundation concerning the use of credit and the importance of consumer education. Really appropriate with the Consumer Duty this year. Areas of expertise: financial abuse, fraud, people in care, and homelessness. A really warm welcome to you as well. So in preparation for this morning's webinar, I've been doing some reflecting for myself personally from the seat that I sit in. As I think about my seat at CAP, the Director of Debt Operations, and I'm in touch with the clients that we serve, I see some of the pressures that they're under. I also see some of the pressures that our staff team are under right now as we're preparing next year's budget, and we're looking at kind of how we can work through pay rises and increases for our staff whose finances are under real pressure. I'm really aware of the challenges there. As my seat as a church leader, I'm really acutely aware right now of the pressure that marriages and relationships are being put under because of the financial pressures. As an under-9s football coach, I also, within that sphere, I hear of strained finances, and I hear of conversations around the football pitch that, to be honest, are really, really tough to hear and are really, really challenging as we just turn up to see and encourage the under-9s play football weekly. I honestly don't think that there's been a better time for us to be talking money than right now. In the 20 years that I've worked full-time now, this is probably the best time for us to be having this webinar and to be learning and sharing and journeying together. So I'm really excited about it. In a moment, we're going to turn to Juliet Flack. Juliet works within our external affairs team here at Christians Against Poverty. They often help us to interpret what's going on with our clients and within the wider society as well, making sense of the stats and making sense of the stories and helping us to interpret how we can push forward. They do a fantastic job. And after Juliet, we're going to turn to our four panellists. We'll hear a brief intro before we jump into some of the questions with them. So enough from me, you've heard enough. I'll be back just to facilitate a little bit later on, but I'll hand over to you now, Juliet. Over to you, thank you.
Yeah, thank you. So I'm just going to talk you through some of the research and insights that here at CAP we've generated from speaking to our clients and the experiences that they faced through reaching out for our debt advice, but also through research we've done with YouGov to see the situation of credit use across the UK. So yes, as mentioned, one of the things that CAP provides is debt help and debt support. And from that, we're able to look at the situations that our clients are in. So just briefly to break that down, to give a bit of an overview of what our client base looks like, we've got the debt makeup of 46% priority debt and 54% non-priority debt. But then looking at how that relates to credit usage, we can look at the most common methods of borrowing and see that credit cards are the highest percentage of borrowing usage within our client base. I'd like to also just draw your attention to the fact that we are seeing an increase in the use of buy now, pay later services. And that, I'm sure, will be a topic that's picked up by our panelists later, but just something that we've found within our client base, we've been seeing that increase over time. So to paint a bit more of a picture, what CAP provides is we provide in-person visits to support people who have had debt that's become unmanageable, that then get supported through working through their budgets with our head office team who consist of FCA accredited debt advisors. And so that means that we're supporting a lot of individuals and people and families who have had situations that have spiraled and their debts, their use of credit has become unmanageable. For our particular client group, that means we've got a high percentages of clients who are in low-income households. So we know that that's then broken down into how they use their credit means that actually a lot of them have ended up in a situation where debt has become unmanageable after a crisis situation, where they've turned to credit and their usage of finances has been altered and affected by situations that their lives have taken. And that can often mean that they're using credit because they are unable to afford the costs of essentials otherwise. So just then breaking down for those that are particularly interested in stats, and I know I've already bombarded you with a lot, but breaking that down on the types of credit used in crisis, we can then see that actually people are turning to a variety of different credit types, but that credit cards are the majority percentage that people are using within those different crisis scenarios. But we know that it's not just our client base, it's not just people that have reached out for CAP's help and support who are using credit and who have had successful relationships with credit, or that their credit situation has spiraled and they've ended up in financial difficulties. Credit is used across the whole of the UK very commonly. And so CAP have commissioned YouGov to run a few rounds of polling so that we can get an insight into people's relationship with money across the whole of the UK. So our latest round of polling, we have just published, and we've got insights from this summer and people's relationship with what is being commonly used, the terminology of the cost of living crisis. But we can just refer to it as increased costs because we know that for some people, crisis situation has happened for a far longer period of time than just the immediate cost of living crisis. But that we can see that actually people are going without essentials. And we are also seeing that people's relationship with money is in a very challenging position at times, with 28% of UK adults feeling financially insecure at the moment. and 9% with debts they don't know how to repay. But there is glimmers of hope that has come through our polling insights as well, of noting that actually 8% of UK adults feel that free financial education could help them on their journey, and that increases with 16 to 24-year-olds who find that that's 16% of that age group finding that actually financial education could help them to feel more financially confident. And noting that lack of confidence in budgeting and knowing how to budget effectively is something that 7% of UK adults don't feel confident at the moment, and 4% don't know how to budget effectively. But that's something that could support some people in managing their finances better and feeling more confident in that scenario. But we do know that that's not the reality for everyone, and that some people on low incomes, even with the best budgeting in the world, their budgets don't quite add up. With our client base at CAP, that's around 50% of people with deficit budgets, which means unmanageable budgets. But just noting that there is the potential for financial education to play an important role in people's understanding of use of credit. But breaking down within those income levels, we can see that people's use of credit in different ways does alter depending on their income levels, depending on their understanding of credit, and depending on their personal situations, which just brings me on to that the most poignant conclusion I possibly can, to note that I have thrown a lot of statistics at you, but actually that it's individuals' situations that matter. Every number that I've put out is a person, is a life, is a situation that people are in, and that is something that we need to hold on to when we are considering how people are using credit now and in the future. Thank you.
Fantastic. Well, fantastic. Thank you, Juliet, for that. Yeah, for all the stats broken down. Some really challenging and encouraging statistics to hear there. And just before we come to our panel for some opening kind of comments, I'd like to introduce Peter alongside of me. Peter heads up all of our money coaching products. We'll get a chance to hear from Peter in just a moment once we've answered some questions. So please, just as the panel start to speak now, I'd encourage you from what you've heard and from what you know about the topic, please do throw in some questions on the right-hand side in the YouTube channel there. But let's turn to our panel. Let's give chance to hear from them for a moment, if that's all right. So we'll hear some opening thoughts from them. Maybe in the Talk Money Week, there's a theme of kind of what one thing are we're going to do. We could hear from maybe one or two of them on what the one thing could be for them. So let's turn first of all to Claire, if that's all right. Claire, are you able to come in, please?
Yeah, sure. Well, pleasure to be with you. Some really sobering statistics there from Juliet. And I think the Money Week do one thing plea that I would issue is to normalise conversations about money. The reason why we need to do this is because millions more people further up the income scale than we've seen in previous crises are really feeling the effects of the cost of living crisis, not just financially, but also mentally, Justin, as you said. So the sooner people have obviously approached debt advice for support, the more they can be helped. The worst of these problems spiraling out of control can be avoided. But by talking about these conversations and normalising them, we can also gain the support of our families, of our friends, of our communities, maybe people at church, because everyone who's in debt, they need support to get out of debt. They can't do it on their own. And obviously, we also need some help from government and policymakers too, but I'm sure we'll come on to that later.
I couldn't agree with you more. I think the worst thing we can be when we're struggling is isolated in any area, and I think that's such a good point to observe and draw out there. We really must get those alongside of us so that we can work together. So thank you so much for that, Claire. Muna, are you able to come in now, please? Welcome to you.
Thank you, and thank you for having me. It's great to join such a strong panel of experts. I'm Muna Yassin, I'm the CEO of Rooted Finance, and we are a community-embedded debt advice charity. So I would absolutely emphasize what Claire has just said, seek debt advice early. There are organizations that can support, and what we do is work alongside our communities to really minimize the horrific impacts of this pervasive cost of living crisis. It's really having a huge impact on people's mental well-being, anxiety levels, and actually their ability to function on a day-to-day basis. I think one of the things that I would say is not only speak about your issues with family, but also recognize that there is no stigma attached. We are in a position to be able to ensure that people are in a safe space, provide culturally appropriate services for them, but also uphold their rights. I think a lot of people think that there is nothing that can be done, but institutions can make mistakes and there can be things that can be implemented for you. I think one of the things that I'd like to emphasize is how difficult the situation is for communities at the moment. I think we all saw the figures that came from one of our partners, the Trussell Trust, yesterday, when they announced that they had distributed over 1.5 million food parcels in the last 6 months. And the level of destitution that we are trying to minimize before we even get to the advice process is staggering. We're working with people to issue fuel vouchers, food bank vouchers, and that's before we've even got to the debt resolution and the debt advice. I think my one thing that I would say, the do one thing, is actually credit is something that people within the advice sector sometimes look down upon for people who are in difficult financial circumstances. And a lot of our clients have had bad experiences with credit in the past or are excluded from mainstream products. But there are needs that can be met by properly designed financial products. And I think I would ask, how do we scale up those innovative products to ensure that they have a more meaningful impact on people's lives?
Absolutely. Thank you so much, Muna. Yeah, this panel's not going to let us down. I can already tell today, kind of from the opening comments, just from Muna and Claire. It's going to be exactly what we need to be talking about, and I couldn't agree more. I think it's probably one of the things. I've been in debt advice 15 years now, and I think the stigma has reduced in that time, and it needs to continue to reduce as we move forward. But that's one of the small wins. But you're absolutely spot on there. Andy, could we come to you now, please?
Thanks very much, and good morning all, and thanks for the invite onto this panel discussing this really important topic of credit. And as we've just been talking about, credit isn't always bad. Using credit in the right way can really be a lifesaver for people. But I'm Andy Limer. I'm a professor. I'm an academic, and I've been so for a long time, nearly 30 years now, doing research work on all things to do with people and their money and their households and how people make money, and how people manage their money. So I'm looking at all kinds of things, from savings and to pensions, short-term emergency funding. How do individuals make ends meet? We've got a fascinating project on the go at the moment, working with real families across the country, looking at how they make ends meet on a week-to-week basis, and trying to look at what more could be done in the policy space. And credit, of course, features quite heavily in all of that. And my plea for doing one thing, we've had two pleas about you asking for help, but I know there'll be a number of people on the call who can actually offer help. Talking to people is a two-way thing. Don't only think about the importance of going out and getting help where you need it. That's absolutely critical, and our colleagues have already talked about that on the call. But maybe you might be in a position to help somebody else. Talking goes both ways. If you could think about forming a conversation with somebody where you might be able to offer help, they may be able to offer you some help in return, of course, but could you offer some help to somebody else as part of a conversation? That could be really useful, and I'm looking forward to the rest of the conversation we have about the nature of credit and how we can use it more effectively and avoid things like the challenges of borrowing from the wrong people, the loan sharks of the world. And as we all know, loan sharks don't all look like criminals. Sometimes they make out to be people who are our friends. How do we find those right relationships to engage with? So all kinds of things I'm looking forward to talking about later.
Absolutely. Thank you so much for that intro, Andy. Really good. And Carol, could I invite you, please?
Yes, thank you. Well, we've already had so many brilliant opening comments. So where can I build from there? As I mentioned, as you mentioned in the introduction, I conduct a lot of research myself, as well as many other people here in the panels do. We do a lot of polling on the mood of the nation, and a lot of very in-depth research as well, narrative research on people's lives, which, as we've mentioned, is so important to really understand people as individuals. And did a large piece recently on the future of credit as well for the Finance and Leasing Association. So bringing all that together, is absolutely right that people are struggling. People are really concerned about rising costs. And one thing that we're seeing, though, is how much we should sort of acknowledge how much people are working really hard to find their own ways to manage this. We found over a third of the population, for example, are actually using their savings, if they're lucky enough to have savings, to respond to rising costs. But about 11% are saying they're having to turn to credit as a way to manage rising costs. And a concern is, of course, is as people's savings run down, do they have to turn to credit further? But to pick up on Andy's point, I think what I think is always really important to communicate and for us to all remember is that bigger picture. And credit itself is not really the problem. For millions of people every day, when we looked at the future of credit, credit can work really effectively and it can be really helpful. It can help them invest in and buy things they need, such as a car, to be able to get to work. There's lots of benefits of credit, and credit isn't always a problem, but it can become a problem, and it often becomes a problem because of poverty. And we've got to keep thinking about that grounding situation that people are in. If they can't access credit, or the credit they can access is unaffordable or high cost, or they really need that credit to survive and are unable to unless they access very high cost credit, we only exacerbate the issue of poverty. But it's poverty that's driving a lot of these problems as well. So we need to think about having a better system that's more accessible to people, but they're also alleviating some of these fundamentals that are driving some of the issues. And if there's one thing I think we should also really focus on, is that there is a lot of evidence out there now. If we're thinking about going from sort of theory to action, there's a lot of evidence out there. We conduct a lot of behavioural studies and randomised control trials, as they're called. We can really show which designs of interface, which types of information, the way of presenting things can help people to make the right decisions for themselves. And we've got to be pulling that evidence together and really using it and really working out practical ways to put that into action to help people. They're really trying to help themselves. Right now, people are thinking about their finances, and we've got to use all the tools we can to help them as well, to help themselves, which people are really trying to do right now.
And good insights into that, so thank you so much for that. We're going to turn to a question or two now, so please do kind of ask a few questions in the right, and we'll be putting those to the panels. Just to kind of, I guess, break the ice and kick us off, I'm going to come to you, Claire, if that's all right. We heard from Juliet a moment ago on all things kind of buy now, pay later. I wonder kind of what your thoughts on that are and what the issues might be with that, please.
Well, buy now, pay later, we were told that it was going to urgently be regulated in 2021. And here we are in 2023, and really we're not much further forward at all. The situation now is that we're relying on people to regulate themselves, which is a very dangerous situation, because the psychology of buy now, pay later is you can afford it, you can quickly say yes, you're deceived by that smaller installment price that you would pay. And at a time of year when, you know, tens of billions of pounds is about to be spent on Christmas and other festive celebrations, there is a danger that people will be overly generous, will overgift, will think, well, I can afford it, there is a way, and then end up with much bigger problems in January. There was a huge report a couple of weeks ago that my friend Sarah Williams, who is Debt Camel on social media, did a very good analysis of on her Instagram account. And it basically showed that people think, well, buy now, pay later, it's okay because it's interest free. It's less scary than other forms of debt. But the research showed that it pushes people into having to take out more expensive forms of debt later on. Final point, Salad Money, who are one community lender who I have interviewed before during my course of the work with the FT, they use open banking to assess clients for affordable loans. And open banking, of course, can pick up how many buy now, pay laters people have. Now, they had an example recently of a woman who had 30 separate buy now, pay laters on the go at various stages, some in month 1, some in month 4. And it just shows you there are no brakes on this as a form of credit. This is why we need the regulation to come in. And although it will be harmful for people in some ways, because if used correctly, being able to borrow interest-free and pay in instalments is clearly helping millions of people in a cost of living crisis if they do have an unexpected expense. But we need to temper the use of it as a helpful tool and the unfettered use of it as a very, very dangerous product.
Really good. Thank you so much for that, Claire. Kind of shocks me to think of 30 and to think of the weight that must be on that individual as well. You know, sometimes I've touched, you know, and after a while it gets a bit heavy and it gets a bit, but 30, that must be quite a lot. So yeah, thank you for that perspective on that. Just to ask for some questions there. We've got a few that we're going to work through though. So I wonder how can we distinguish between good credit and bad credit? And I wonder, Andy, could you come in and help us with your thoughts on that, please?
Yes, thanks. No, very happy to. We've all said that credit is not necessarily of itself something that you should always avoid. There's a mantra I think that we got when we were, many of us were growing up, that we were told, you know, never a borrower nor a lender be. Try to avoid that idea of borrowing money at all costs. And of course, in modern society, you just can't. It's just not possible to be able to do that and be able to lead the life that you are able to, or that you might wish to. The challenge is being able to balance what debt you can afford to take on. And so entering into debt, thinking about how I'm going to repay it. And good debt is debt that you know how you're going to repay. You're managing it to ensure that your income is such into the future that you'll be able to repay whatever installments you need to repay, or repay it before it becomes chargeable with interest. So one of the pieces of advice that people may consider is using a credit card that has an initial 0% period on it, and being able to move some of your debt into that context, and therefore remove paying interest on it in one place to not have to pay interest on it somewhere else. That can be a really useful tool under certain circumstances, provided you know you can pay it off within that window of that 0%. You can save yourself the interest that you would otherwise pay. So using credit, provided you do it carefully, you take some advice. If you don't feel that you understand what you're doing, that you think carefully about how you're going to pay it back, can actually be a really useful way of bridging maybe income that isn't coming in every week if you're in a precarious job, or periods between when you're receiving your income, or if you're going on to universal credit for the first time and you're having to delay. You know, there can be good reasons why you can make use of credit, as long as you do so carefully. And the key thing is to know, when I'm taking on credit, how am I going to pay it off? Am I going to be able to pay it off in ways that enable me not to end up with this becoming a burden that I don't know how to deal with, or that I'm ended up using one credit facility to be able to pay another credit facility in a sort of never-ending chain that's just going to affect my mental and physical health. So those would be some of my suggestions.
Brilliant. Thank you so much for that, Andy. Really, really good perspective there. Moon, I'm going to come to you. We've had some questions that have come in, if that's all right. One of the questions from Ian watching, he's asked, what's the difference between buy now, pay later and credit cards? Aren't they as bad as each other? And we know how much credit cards can be harmful.
It's a very good question, Ian. And I think to Claire's point around the difference at the moment is obviously regulation. Credit cards are regulated, and I think the key thing around with credit cards and buy now pay later, they are designed for you to be able to pay your balance off by the end of the month. And I think a lot of our younger people recognize that a credit card is a debt, but actually the way that the buy now pay later is marketed, a lot of people actually don't recognize that it's a debt. They see it just as a form of payment, as opposed to a formal debt. So I think there are issues around how it's presented. I think there are issues around consumer understanding. And I think obviously there's the regulation piece as well. I think my main concern for a lot of our client groups is that it's not about luxury goods that people are purchasing. A few years ago, there were concerns around it was marketed for clothing and other luxury goods. People are now purchasing essentials with buy now, pay later, which is a symptom of a much deeper problem. And I think it comes back to that point around that we are storing up future debt issues for people who really need support, as opposed to more forms of credit at this stage. And like Andy said, there are times where credit is the right tool and the right product, and there are times when it isn't. And what you need is additional support around that. And I think we need to go back to where we were prior to the financial crash. We all know that was caused because too many people were being lent to completely irresponsibly. Affordability was not being taken into consideration. And I think what we're on the verge of, if we keep on delaying with buy now, pay later, is storing up another generation who are going to go through the same issues that the previous generation did, and we're not learning from those mistakes.
Absolutely. Thank you so much, Muna, for that. More. It's really concerning when people are paying for the essentials on credit. Kind of, to be honest, breaks my heart a little bit. That, and I just don't think I think we can do better than that, can't we? In helping each other. We've got a question from Alison. Hi there, Alison. Interested in the panel's view on Klarna. Klarna's, should there be better regulation around this? We've touched on that. Alison does a lot of coaching with teenagers for whom this is kind of completely normalised. For example, Uber Eats and so on. And Carol, could we come to you? And especially from a Klarna perspective, I'm really keen to hear from a financial abuse. Do you see any correlation, any kind of crossover there at all between those two?
Well, thank you. Yeah, I conducted research last year for the Financial Services Consumer Panel, who look at consumer protection in financial services at early stage credit use. So people beginning to use credit for the first time. And what we found amongst young people, it was almost impossible to recruit people beginning to use credit who weren't using buy now, pay later, of which Klarna can be one provider of that. And that normalization point is really key in terms of got to really understand what is driving people to use these products. They can seem so convenient. And people I interviewed talked about so convenient, all my friends do it. So the choice architecture as well, which Muna's mentioned, is how it's set up. And it's set up to make it really easy for people to use it. It's almost easier to pay, you almost have to do more steps in the payment journey to not use buy now, pay later. So we've got to think about all those things that are driving people. It's culturally, whether it's a normalization of it, whether it's the design of the products, because with understanding all of these things, you can help to understand how to educate people around what's more effective for them to use. Don't think it works just to come in and say, you just shouldn't use that. If all their friends are using it, it's helpful, it's convenient. You have to really understand some of these drivers, such as normalization, and think about how do we counter that effectively that treats people with respect and their circumstances with respect. And it's only through really understanding why they're using these products, what's driving the use of it, that you can begin to undo that and sort of unpack it and counter some of the potential risks. And there's that thing with young people, as we've mentioned, about educating them on different options they have, and that buy now, pay later is a form of credit, which they often don't even realize in itself. So a lot of things to unpack, but it has to start from understanding why people are using these products.
Yeah, thank you for that, Carol. I think it'd be a good kind of just to segue from that, talking about kind of young people there and talking about the younger generation. And one of the things I noticed there in the presentation from Juliet earlier on was that it was that younger generation that will perhaps be more open to money education and help with that. That was really interesting for me to hear that, to be honest. I'd not seen that. So it might be a good time just to turn very, very briefly to Peter alongside of me, just to hear a little bit about money coaching. We'll hear from Peter for 4 or 5 minutes, and then we're going to come back to the panel again. And I can already tell that time's going to be really tight here. We're going to have words with the organisers and try and get more time next time, because it's really, really rich discussion. So thank you so much to our panellists. Peter, money education.
Great. Thank you very much, Jake. I'll bring the mic over this way. So CAP has been involved in financial education for both adults and kids for about 15 years now. And money coaching is the successor to the CAP Money course, as we used to call it, which is our financial education toolkit, especially for adults. So we're just going to start off with a quick video that gives you a bit of a taste of some of the video materials that we make available in that toolkit.
In the UK today, 20 million adults admit to having struggled with their finances. That's about 1 in every 3 of us. So how do we stay in control of our money in a world that wants to control it for us? I've got a team of the greatest money experts in their fields, ready and waiting to share their wisdom. For all of us, for free.
Fantastic!
Let's do it. We'll go through a few different examples, if that's okay with
Yes,
you.
please.
Managing money and mastering your money is about being able to enjoy life.
Oh, I love that. That's brilliant. Do you know what, Peter? I think even I've understood that. Whatever you're trying to achieve with your finances, whether it's getting on top of debts, understanding your spending, or learning to have a healthier relationship with money, our free coaching can help. Find free money coaching near you.
Great. So a little taste of the resources there, featuring, of course, Claire Barrett amongst a number of other fantastic experts. But before I explain about that, let's just briefly touch on why money coaching. Of course, we've covered some crucial stuff already, but in particular, I want to highlight 20 million UK adults have low confidence when it comes to budgeting, which is just a huge number. And of course, there are these crucial links between financial capability and then problem debt, mental health issues, relationship breakdown, and poverty, all of these negative effects that people can experience because they don't have the confidence or the skills or the tools to make the most of the money that they've got. Of course, money management can't fix all the problems we've talked about today. Some people are managing money really well and just have a really low income, but nonetheless, there's plenty of people for whom actually it can make a real difference. So what is money coaching? It's a toolkit with 3 parts. So we've got the videos that you've just seen a sample of, covering a whole range of topics around how to build a budget, how to balance a budget, wise use of credit, and a bunch of other things around making the most of your money. But of course, the information is just one small part of the story. It's also got a bunch of interactive activities. So I was running a session with a group of adults yesterday, and we were talking about use of credit, and we had a load of scenarios printed out on cards, and we said, you know, here's an example of a situation that someone could be in, whether it's car finance. That was one that came up. Someone shared about how they had to pay a much higher interest rate because of their financial history, and they're saying, well, you could get an older car, but then you maybe pay more maintenance, and there are all these really nuanced things that we were just having a great dialogue about. So it's the activities that embed it. And then also some fantastic digital tools that we've just launched, a budget worksheet that actually helps people build and then keep that budget over time. Because, hey, if you've made a spreadsheet for your budget, good on you. But I know for most adults that the numbers are just a huge barrier. And so we've made a digital tool as well that they can use that integrates with some of the core teachings of the course. So these tools are used by volunteers in churches across the UK. So CAP partners with over 500 churches and over 1,000 volunteer coaches who are passionate about just making a difference in their community. Obviously, Andy here on our panel is one of those, and many others. I'm sure some of them watching on the call as well. And yeah, helping should be next year over 6,000 adults make the most of their money. So our real privilege to do that. And I'll just close with a little snippet from someone who recently was receiving money coaching, which I just think is a great summary of the impact that it can have. They said, now I feel I've got more of an idea about money, and so it's something I can think about more logically rather than in a bit of a panic, trying to make things work last minute. I'm sure we can all relate to that. I feel like I'm more in control than I was. I think that's what we all want for people, isn't it? To feel in control of their finances. And so that's what we try and do with money coaching, taking the information, but really trying to take that information and put it into practical action through those conversations and through actually getting people to write out and balance and start to implement a budget in their finances.
Brilliant. Absolutely superb. Every video I see from that new money coaching course, I just think is incredible. So thank you to you, Peter, and to all the team that have played a part in that. I'm sure it's going to be a significant help to thousands, tens of thousands in the coming years. So thank you for all the hard work there. We've had a question in that I'm going to put to Andy, if that's all right, Andy. One of our debt coaches has said, as a debt coach, we ask people not to take out further credit when working with CAP for debt help. Is this unrealistic? That's from Ruth. I appreciate I maybe should be answering some of that as well, but I'm not a panelist today, so I'll hand over to you, Andy, and bless you with that one.
Yeah, thanks for putting me in the hot seat on that one. Well, so yeah, as Peter has said, I'm a money coach, and the new course I just think is fabulous. I think the way in which the materials have been put together and the way in which you respect the conversation that you have with people through using those materials is really important. And but there are some fundamentals that are laid out in the program, and they do explain why. And I think one of the advantages of going through a money coaching course, certainly from my perspective, is it just gives people an opportunity just to be able to pause, just be able to say, now, hang on a second, let's just think about where I am. Let's have a conversation with people who I can build a bit of a trust relationship with, either as a small group of people or on a one-to-one basis with somebody in a local church, or somebody maybe I'm never going to see again, where I can just share something about my life with them and get a bit of help. And so sometimes just pausing can actually be a really helpful thing to do. So that's the way I use that idea of saying, well, look, just hang on a second. Let's just think about this for as long as you can. But of course, in reality, if somebody's in an emergency situation, they've got to pay for something, then in reality, of course, that may not always be possible. Where it is possible, just taking a pause and thinking about things can be a really healthy thing to do, to step back, abstract yourself a little from that crisis situation that you might otherwise be in. And the course, I think, can be a great way of helping with that.
Really, really good, Andy. I could not agree more. Some of the conversations I have within the church, some of the worst decisions are the rushed decisions, the panic decisions that we kind of quickly sign up for, and they can be really, really damaging. So it's really, really good. Thank you for your observations on that. Muna, I wonder if I could invite you into that question, please, around whether or not it's realistic to expect to not take up credit when you're seeking debt advice.
I think Ruth's put a great question. As debt advisors, obviously, we're looking to minimize people's liabilities and their debt issues, but actually it's not realistic to think that credit is not an option for people that are going through debt. Sometimes a debt consolidation loan actually can be the main kind of solution for them, but also it depends on the individual circumstances. So for example, if somebody's paying high cost interest, actually, it may make sense for them to look for an alternative lender to be able to reduce their interest. There are also issues around loan sharks. So sometimes you can't just say to somebody, let's set up an arrangement with a loan shark. It may be beneficial for that individual to take out another loan to be able to pay off the loan shark. So A, they are safe, but secondly, they're in a regulated agreement as opposed to something that's illegal or informal. Some clients may not want to report their loan shark, and that's where you have to take their needs into consideration. But ideally, you would want to be able to work with the illegal loan shark team to be able to ensure that those loan sharks are taken out of the system. I think there has always been this dilemma between debt advisors and the debt sector and credit. And I think it has to be based on the individual's best interests and what's best for that client, as opposed to a blanket, kind of sometimes judgmental view that credit is bad for everybody, whereas sometimes it's dependent on that individual's aspirations and their needs at that time that they're approaching you. But like Andy says, it's about taking a pause, making an informed decision and working through with your client what their needs are, as opposed to you coming from it from a point of judgment.
Thank you, Muna. Really, really good additional thoughts to that question. Brilliant. Well, I'm going to ask a question now to Carol, if that's all right. Carol, our money coaching videos provide a wide range they provide for kind of a wide range of group, really. Are there certain groups who face greater challenges in accessing appropriate credit for their needs?
I mean, yes, absolutely. I think, as we've mentioned, first of all, is people need to know about different types of credit that is available, because what we find is people tend to, as we've already discussed, they talk to other people, so they might use the credit because someone else they know uses it. It might not actually be the best one for them. So first we have to think about where are different groups even finding out about the types of credit that is available, because people will often fall back on what's familiar or what's around them. That doesn't mean it's right for them. Obviously, groups who have impaired credit files, who've had issues in the past, will struggle to access credit, or if they do have to access credit, it may be very high cost credit, which puts them in an even worse situation, or as we've discussed, might have to defer to illegal money lending, which again can become a really difficult situation. So there are those groups who will access it differently. The kind of irony is almost the people who can access it the most easily and have the most choice are those who have the fewer financial concerns. So I think it's how do we look at creative ways within the industry, look at different options to enable those people who may otherwise not know about certain options or not be able to access certain options, be able to access lower cost, effective credit that can help them for their circumstances. But I also really see people self-select. The other thing I see in research a lot when we ask people about which credit they've chosen to apply for or chosen to use, they will go for the one they think they will be accepted for. And that isn't always necessarily correct. So they almost also self-select and might go for a more expensive option because they're self-selecting what they think is going to be the outcome. So I think that's where education really comes in, to help people be able to see the full range of options and make sure they're going the right one for them and not self-selecting into a more expensive or a more negative form of credit.
Thank you, Carol. Really, really good points here. I can tell we're already running out of time, but I want to ask a few more questions, if that's all right, as we're on kind of the home straight of this webinar. We'll finish up at 11 o'clock. I wonder if we could come kind of back almost to where we started, really. One of the questions asked earlier on from Emma was, what regulation would you suggest is implemented for buy now, pay later schemes? And I wonder, Claire, could I ask for your thoughts on that, please?
Sure, and it's entirely possible other more knowledgeable people in the panel might want to pile in too. But I think the biggest problem at the moment is affordability. So because buy now, pay later loans are not treated as a form of credit, there are no affordability checks needed when people take them out, whereas everything else, the lender has to, by law, assess your ability to repay that loan. Hence, we end up with a problem, an extreme problem, I admit, I mentioned earlier, of people with multiple payday debts that they've built up over long periods of time. But it also makes me wonder how much the government really wants to sustain this method of borrowing, because they could have clamped down. They were told in 2021, this is an urgent problem that needs to be solved, and that was over 2 years ago now. And I just think maybe they are so worried that there is such a paucity of other forms of credit out there in the market, they can't push the button on regulating buy now, pay later until there are alternatives, like we saw with a very rapid withdrawal of payday lending, which arguably has exacerbated the rise in problematic loan shark lending. So I think regulating buy now, pay later is one thing, but absolutely we need to come up with products that can close that credit gap and replace it. Credit rationing is only going to get more and more severe with interest rates high and mainstream lenders worried about the level of impaired loans that they've got on the books, particularly if the economy takes a turn for the worst. So the biggest solution is supporting CDFIs, community development financial institutions, and their growth. In the US, the banks have to pay a levy, the big commercial banks, to fund CDFIs who are lending small amounts of money at affordable rates, and also providing other forms of help, like, for example, Salad, one of the CDFIs I mentioned earlier, but also many others. In fact, including Christians Against Poverty, if people approach them for a loan or for debt advice, they make them first do a benefits checker, and that has unlocked, tens of millions of pounds worth of unclaimed benefits that people could have been entitled to, that also help to alleviate the same problem.
Thank you, Claire. We've had a couple of questions as well on a slightly different track, which is more around the money education. So I wonder if we can turn very briefly to you, Peter, if that's all right. Having said that young people have little confidence and little and limited understanding about money, will there be a new course for youth that might be delivered in schools? And then following that, I wonder if maybe just a few pointers on navigating how you would kind of get in touch regarding CAP money, money coaching.
Yeah, absolutely. I mentioned that historically we've done financial education for both children and adults, and we had some kids and youth stuff that's been used very successfully in a wide range of schools. It's very much on our radar. It's something that we're hoping to look at next year to get a refreshed thing for under 18s and perhaps some different age bands out there, and so sort of watch this space on that, I guess. But also I do know of some churches that, because the new materials are really interactive, targeted towards a younger age group, that they're hoping some of the activities they'll be able to use with the sort of older end of the youth age range as well, and so definitely some interesting applications of that. For anyone that is interested in getting involved in money coaching, the beauty of it is all the content's on the video, so you don't have to be a financial expert. It is very much about just facilitating activities and helping people think through things for themselves. So if you go to capuk.org/money coaching, that's pinned on the chat. I think you can either just inquire to find out a bit more, or you can sign up if you know that you're keen. We do training both online and in person, so you can access that at any point of the year, but there might be an in-person day near you as well. If you're wanting to do that as part of a church, we'd love to chat and equip you with those resources so that you can help people in your community make the most of whatever money they've got.
Thank you, Peter. Absolutely fantastic. I think there's probably one more question that we'll have time for, if that's all right. Can a lack of mental capacity, this is from Guy, can a lack of mental capacity ever be used as an argument that a contract is not enforceable? Andy, I wonder if we could just quickly put that question to you, and then maybe go to the panel just for a closing thought briefly from us all, and then we'll wrap up our time together. I appreciate we're on the very end of the home straight.
Yeah, thanks for that one. I'm not a lawyer, so I honestly don't know the answer to that. I think the challenge would be, how do you prove what adequate mental capacity would be in order to be able to take on a contract? And there is my understanding is there is law around that sort of thing, more generally around contractual law. So I would imagine, and you must forgive me, I don't know the answer to this question definitively. I would imagine that sort of thing is perfectly possible. But as Claire said earlier, that one of the challenges you've got around the sort of buy now, pay later type challenges is that there aren't affordability checks. There is you're falling back on the general law about when you're buying and selling products, and on what capability people have to actually make a transaction more generally. So this is going to be a really difficult thing to sort of engage with and prove. The trick, as we keep talking about, of course, with this, is not to get yourself into that situation in the first place if you can possibly avoid it, to try and engage with ensuring that decisions are made appropriately. But of course, if you are in a situation where you're struggling to be able to make those decisions, if you're struggling with your mental health, then this can be a really challenging context and a really challenging environment. We did some research as a centre on looking at the relationship between mental health and money and money challenges, and it's an enormous problem. So it's a really good question, and maybe an area of policy development that we really ought to be encouraging and thinking about. How do we do a better job of protecting those who need that kind of protect around mental health conditions that they may be facing?
Yeah, fantastic. Thank you, Andy. Sorry, I've given you the tough questions, but to be fair, you've done a great job in answering them. I think that is a really difficult one, that one as well. And I think of a conversation I had just last month with somebody within our congregation at church who, to be honest, I wondered in my head that very same question as I found out about this car finance deal that they'd signed up for, and I was just slightly exacerbated. But it's okay. We work through it together, and we try and work through the solutions. But it's a really, really good question, and a really difficult one to answer. I wonder if we come to the rest of the panel now. Carol, can I invite you in, either on this question here or any other closing sort of thoughts from you, please?
Yeah, thank you. I think Andy did cover that challenging question so well. I will instead have a sort of closing thought. I think I would just loop back to the introduction that many people made around the importance of talking about money and the importance of, I think in doing so, helping to educate people as well. And whilst we've mentioned that there is less stigma than we may have seen years ago, in my research, people who have problem debt or also actually have experienced perhaps fraud and scams, which has created financial pressures to them, there is still a lot of shame and it is still difficult. And there are also lots of sort of myths and things that people discuss with others that maybe aren't true when it comes to how you manage finances. So I think really encouraging people to talk, having a supportive environment, making money just something that we can all talk about and normalize, and negative situations such as debt be something that people really understand. So often people who've had debt say they wish they'd known what they know now after they've gone through it. So really hearing from people who've gone through it and come out of it can be also really helpful in that conversation. So we could keep those conversations going, learn from people who've been through it, and make sure all that support is available through coaching, for example, and budgeting tools that you've mentioned. It's not an easy, there's no easy solutions, but it doesn't mean we shouldn't keep on trying, keep on pushing it, because there are solutions and people can be helped.
Absolutely. Thank you, Carol. Well, I'm afraid time's up now. We've run out of time, so I really wanted to go to Muna and I wanted to go to Claire, but I'm sorry, time has kind of caught up with us. But we have heard so much really valuable insight from our panelists, from Peter. We've had some great questions as well from all of you guys watching on YouTube. So can I say a massive thank you once again to all of our panelists for all that you've brought to this. Let's keep talking about money. Let's keep, again, not being isolated. Let's keep supporting each other within our communities, within our families and friendship groups. And I believe that's going to be part of the answer and part of the solution. But a massive thank you to all of you for joining us online. Thank you to our panelists, and we'll finish this time together. Have a great rest of day. Thank you.